Hello everyone, welcome to the ichimokucharts.com daily analysis for the SP 500 for Monday, May the 17th, 2010. Well, quite a change of character for this market today, and we have a very small body candle. This is almost a doji type candle, and that denotes that neither side made any bullish nor bearish progress on the day between the open and the close, and that's in stark contrast to the previous two candles where the bears made significant bearish progress the previous day and then an amount the day before that. And the worrying factor here for the bears is that the amount of bearish progress that they were making had increased on the previous day. Today it's all dried up. The candle also has a very large shadow on the bottom, and that denotes buying coming in, and it tells us that the sellers have actually lost commitment as the market traded down to these levels. Now, there was some sort of a hint on the previous trading day that that was happening with this smaller shadow on the bottom of the body of the candle, and that represented buying coming in as the market attempted to trade through the 1133 support. And again today the market has traded down through there and the buyers have come back in again. So all through this region is quite strong support. The market also traded down to the bottom of the cloud and traded just through there and the buyers came back in. So we should always expect there to be some strong support around the bottom of the cloud here. Also it coincided with the Tenkan-sen, and we expect to see support around the Tenkan-sen as well if the market's trading down to it. Now, having said that, however, the trend remains down, and with this trend remaining down, there is still a chance that the next trading day will be a downtrend and we might test these areas again. That, as we've said, is not supported by the short-term dynamics in the market. With the bulls closing in control on the trading day, the bears losing commitment, but the bulls certainly weren't strong enough or lacked the commitment to actually take out the previous high for the market to change the trend. We do need to bear in mind that the market is trading within the cloud, and that tells us that we have a neutral market at the moment, so we do need to be careful about taking any positions in this market. The market is now, however, trading up above the Tenkan-sen, which means in the fast-term time frame the market has it still remains up there. It's failed to close down below there, which may be significant for this market. The market, however, remains up above the Kijun-sen, which represents the medium-term time frame, and we have a flat Kijun-sen, which is telling us that the market is pretty much trying to find equilibrium around this level. It's oscillating above and below this level. Now, if we do have a change of trend to the upside, then we do have some solid resistance all the way up here, and solid resistance through the cloud. Anywhere in the cloud can hold as resistance, but we have some previous swing highs or swing lows that will offer resistance at 1150, 1163, and then up around 1169, and then up to 1179, all the way up to 1200. So some decent resistance on the way up, but solid support on the way down. Certainly not as many levels on the way down, but we certainly do have the bottom of the cloud to contend with here. So I think for the next trading day, what we need to do is watch the short-term dynamics. If we do see some bullishness coming into the market, then the market may retrace back up to some of these levels. The high of this current candle becomes very important for a potential higher high and higher low. Certainly not a market that one would want to be trading at the moment. I think we need to wait for some resolution for trading outside of the cloud in either direction, and then we may have a clearer picture of where the market is headed.